What's going on, guys? Anthony here from MarketChartWatch. Today we're going to be looking at a long-term view here of the S&P 500, and we're going to bring us in to the small scale, see what's going on in the next coming days. So you can see over the last year or so, we've been climbing. Had some economic data that sort of tipped the scale, and then the tariff news really pushed us even further around here. We have rejected a trend line that's been going on for multiple years, so we have strong support there. And let's bring us into a closer time horizon up here, okay? And we're going to bring us into the 15-minute charts just to make things a little bit more spicy and interesting. So some of the things I want to note when we take a look at these charts here is that we have some gap fill regions. And we've talked about this in previous videos, these fair value gaps or gap ups and gap downs in after hours trading in the blue to pre-market trading in the gold here. Okay, and I will actually highlight those with some boxes to just briefly show you them. Okay, but one thing that I also want to show you before we even set up those boxes is just bring you back into the macro scale a little bit of the past couple weeks. I'm going to remove that large multi-year trend channel that we have here in blue. And I want to highlight about a 14-day trend channel that we have formed here. And so you can see we formed a trend channel here. We broke out of it today with that value gap. And it looks like in after hours trading, we're trying to ride back into it again. So if we sort of enable our fair value gaps again, a gap here, and a gap here, you can see that we have three fair value gap areas that the market is trying to price into the equation. So in today's move, which happened earlier today, we bottomed out at the bottom of this fair value gap here, broke through it, and so this was a high probability trade because once you break out of the fair value gap, you're going to try and trend out of it and retest, right? And so that's exactly the move that happened. We trended out of it, went into another fair value gap, and retested. Okay, so these are high probability moves. This is where I made my money today, was playing in between the two fair value gaps. So after hours, we did go into the fair value gap and again rejected it. And are you guys noticing anything here? You see how we keep rejecting all these areas here? Rejecting. Almost rejected here and stuck without. So I'm just pointing out here that fair value gaps are very important. They provide a ton of support and resistance because it is an area of abnormal trading where something is shifted in one direction or the other, and so there is no equilibrium. And so if we interlay both the fair value gaps and the technical charts in here, and we overlay this big move from after hours trading to the tune of, give or take 1%, we can see that the market is trying to find where it's going to land within the fair value gap and break out of it to retest other areas. So let's see what the market makers are pricing in for the move. Well, number one, let's look ahead in the future. And the futures contracts are showing no discernible change in after hours trading after 5 p.m. today. Okay, so there's no discernible move there. If we look at the options prices, the market closed at 558.80. So we can look at the 559 since we're going to round up. And our put contract price is $309. And our call contract is $289. So the premium is to the put side. You're going to pay more money to buy the put because the market makers have an implied move to the downside. Now, if we were to multiply or add this up to look at the implied move, we'd add $309 plus $289. Multiply that by 0.85 to take the median and divide by the strike price of 559. That would give us a move of roughly 1%, 0.90, so 0.9%. Now, interestingly, if we take a look at what that implied move does, if the market closed about here, you can see that implied move puts us right into that channel that blue channel that we've been forming for 2 weeks. So the implied move to the upside would put us into this channel. Not sure what just happened there. Okay, there we go. So that's interesting, but what's even more interesting is if we take out some of our trend lines. Okay, let's just add it in because this thing is glitching out a little bit. But if we take a look here, I'll just kind of add one in as we go. We'll have a trend line around, oh, there it is. Okay, it's finally loaded. Excuse my computer error. So we have a trend line here where we have a high filled in here. We have some trade volume here that's touched on this before, etc. So we have a couple of good touches here. We have 2, 3, 4, 5 touches on this. So this is a good point of support or resistance. And let's see what it does in this region here. So if we were to actually look and see what our implied move is from market close, well, would you look at that? 0.9%. Well, I apologize, guys, that this is doing this so much. But that implied move is 0.9% from here to here, give or take. So the market makers are implying a possible move of 0.9% to the downside. However, because we've priced in a 1% move since market close, in reality, that move is now going to be testing yesterday's lows. So what does that mean for this? Well, in after hours trading, this is pretty much a guarantee that we are going to test either this gap fill or this gap fill. There's absolutely no question about that. And we will then reject it in either direction. So I would be playing the move opposing this in tomorrow's options trading. So if we were to take this and we come down here, I would be playing the move to the upside. So I would be playing the call side, selling here, or in reverse of that, if we tested this fair value gap, I would be playing the put side, where I'd be purchasing in here and selling the contract at this before it retests. So I'll be, in this basic scenario, I'll be playing the reversals for profitability. So we're expecting a 1% move tomorrow. After hours trading shows that implied move is sort of already happened. And we will see if we're able to connect into this 14-day trend line. There's nothing to stop us from making a move to about a quarter of the way up, and then about a third of the way up tomorrow. I don't see any issue with that. But if we're to go to the downside, our downside probability is here before we do retest. Anyways, it's been another video from Anthony here at MarketChartWatch. Please follow along the page. We hope to see you here. Thanks for watching. Like, share, and subscribe. We'll see you in the next video.